Okay, so this video is to explain how critical illness insurance works. This is typically something that's advised on alongside life insurance. Obviously, as I mentioned, life insurance pays out if the client dies. Critical illness insurance will pay out if the client is diagnosed with a condition or an illness that potentially could kill them. So things like a cancer or a stroke, heart disease, even what they call permanent total disability, clients been in a car accident, for example. Things that are potentially life altering, life threatening, or would just cause changes to employment. And the idea is that, with cancer, for example, the statistics are that 1 in every 2 people will have some sort of cancer of some degree in their lifetime. And that can be something that's treated very easily, or it can be something that, as I say, is potentially life-threatening. So the idea here is that in that situation, the critical illness policy would pay out a lump sum, or in some cases it can pay out a monthly income. Usually it's a lump sum, and the idea with that is that it can provide a cash cushion where you've got a bank account that's you don't need to worry about the bills being paid, or you could pay off part of a mortgage with it. Or if it's a case where the client's become disabled, it could be used to make alterations to the house, for example, widening doorways or putting in a downstairs bathroom just to make life a little bit easier. And that's the idea, is that in many of these cases, a client's going to have to maybe sort of rein back on how, what they do for work, how often they work. They may need to give up work completely to undergo treatment. So the critical illness gives them a lump sum of cash that they can use as a cushion that will basically just make life a little bit easier for them. As with the life insurance, it is underwritten on health and medical history, so it won't cover existing conditions. And the application will ask quite a lot of detail about any sort of pre-existing conditions or any hereditary conditions, and sometimes that can mean that they won't cover particular illnesses, or they will increase the premium to cover particular illnesses. It's something that, again, can be used by basically anybody that wants it, whether it's to cover a mortgage, to cover a family. It's all about sort of financial security, really. It sits alongside life insurance quite nicely. So typically people that take critical illness would also take life insurance, which means that if they take the two policies together and they're diagnosed with a critical illness, then they'll get one payout. And then if that critical illness unfortunately leads them to passing away, then there's a life insurance payout to go to the family after that as well. So it really gives them a good kind of all-round level of cover.